California's property insurance crisis is spiraling out of control. If you own properties in California, you probably already felt it. Your premiums are skyrocketing if your insurance company hasn't already dropped you. If you're trying to buy a home, you're discovering that getting insurance has become a nightmare. And the worst part, the future looks even bleaker. The recent LA Palisade wildfire didn't just destroy over $40 billion worth of properties. It torched the last hope of keeping insurers in California. Companies are pulling out, policies are vanishing, and costs are exploding. Just how bad have things become? Let me show you the numbers. 7% of all real estate transactions in California fell through in 2023 because buyers couldn't get insurance. Premiums have skyrocketed. Some homeowners are experiencing rate hikes of 50% to even 300% overnight. Several major insurance companies, including State Farm, Allstate, Farmers, Hartford, Tokyo Marine, USAA, and more, have stopped writing new policies in California or are severely limiting coverages. Over 400,000 homeowners are now forced onto the state-backed FAIR plan, which was never meant to handle this kind of volumes. And if you own one of these type of homes, finding insurance can be very challenging. First is properties in fire-prone areas such as brush areas, mountains, or near forests. Number two, older mobile homes that were built before modern fire codes. We're talking about mobile homes that were built in the 80s and the 70s. Three, older homes that do not meet certain safety standards, such as having outdated wiring or plumbing, like some of those fixer-uppers having knob and tube wiring. And if they have been vacated for an extended period of time, it's getting even worse. So with these type of situations, you should just go straight to the California Fair Plan, which might just save you some time. And speaking of the Fair Plan, it was supposed to be the last resort, but it's now the only option for hundreds of thousands of homeowners, which is a problem. You see, the Fair Plan policies are far more expensive, cover way less than the private insurance, but now it's even taking months to process due to the overwhelming demand. And here's the scariest part. What happens if the Fair Plan itself collapses? Because it's not built to handle mass default, and if it fails, hundreds of thousands of homeowners will have no insurance at all. So the question becomes, how did California even get here? Let's start with the obvious, the climate change and wildfires. California has suffered over $40 billion in insurance losses in recent years from fires alone. In 2020, wildfire burned 4.3 million acres, more than any other years in the state's history. The entire town, like Paradise in 2018, were wiped off the map. So while these disasters are really bad, can we just blame everything to the climate and say, well, too bad, maybe better luck next time? Well, let's take a look at other states that also have frequent natural disasters and see how they're doing with the insurance situation. Texas, for example, deals with wildfires, hurricanes, tornadoes, and massive hailstorms. It has experienced $190 billion weather disasters since the 1980s, more than any other state. Florida is hit by hurricanes almost every single year, with Hurricane Ian alone causing over $112 billion in damages in 2022. And like California, insurance premiums in Texas and Florida have skyrocketed, and some insurers have pulled back. In 2023, Texas home's insurance rate rose 23%, twice the national average. Florida saw multiple insurers go bankrupt due to hurricane claims, but here's the difference. Their insurance market are still functioning. Texas allows insurers to adjust rates freely, so companies aren't forced to operate at a loss. Florida has Citizens Insurance, a state-backed program that, while expensive, ensures that homeowners can still get coverage. California, on the other hand, has pushed insurance companies to the breaking point, forcing them to abandon the entire state. At this rate, the market isn't just shrinking, it's unraveling. If this continues, we could soon reach a point where homeowners have nowhere else to turn. No private insurers and no safety net. Imagine a future where buying or selling homes in California becomes nearly impossible because of this. And this brings us to the real problem. Why is California's crisis so much worse? Well, when we look beyond the wildfires and the weather, what we see is an outdated system and regulation that have been brewing for years. First, the overregulation and Proposition 103. Since 1988, insurers cannot raise rates freely in California. Unlike other states, they must get government approval to increase premiums. Even when wildfire risk goes up, this forces them to operate at a loss until they leave entirely. Then it is the flawed pricing models. Insurers are forced to use outdated pricing model that only consider past losses but not future risk. This makes it impossible for them to charge fair premium. And last but not least is the government mandated risk. You see, California has been pressuring insurers to cover high risk areas. It's similar to forcing life insurance companies to cover only terminally ill patients. It's simply not sustainable. These regulations have forced insurance companies into a system that guarantees losses, which leads to massive financial losses and eventual exits from the market. And as a result, over 400,000 homeowners have been forced onto the FAIR plan. This makes the total exposure of FAIR plan skyrocketed to $393 billion, raising concern about its financial stability. And if the FAIR plan eventually fails, hundreds of thousands of homeowners will be left with no insurance at all, and California might just become the first state where homeownership becomes nearly impossible due to the lack of insurance. Now, what is California government's solution to this insurance crisis? The California Insurance Commissioner Ricardo Lara has introduced a comprehensive plan to address this state's escalating insurance crisis, and the key components to his strategy includes: number one, faster rate approval, which means the insurers will be able to adjust premiums more quickly. And number two, forward-looking climate models. This means that the insurance companies can now price based on future risk. And number three is reforming the FAIR plan, which includes increasing coverage limit and expanding wildfire coverage. Sounds great, but will this actually work? Some experts said it is too little too late because insurers will never come back unless California drastically changes regulation. So, why hasn't California changed its regulation yet, specifically Prop 103? The short answer is politics and consumer protection concern. Proposition 103 was originally passed in 1988 to prevent insurers from overcharging consumers and ensure fair pricing. Over the decades, it has become untouchable due to strong lobbying from consumer advocacy groups who fear that altering it will lead to massive rate hikes. Additionally, California has a history of fighting against price discrimination in insurance. Regulators fear that if insurers regain full control over pricing, they may refuse to cover high-risk areas entirely, leaving vulnerable homeowners without any option. However, this well-intentioned law is now backfiring. Instead of preventing high premiums, it is driving insurers out, shrinking the market, and forcing homeowners onto the FAIR plan, which is even more expensive and less comprehensive. Unless the state finds a balance between consumer protection and insurers' sustainability, California's insurance crisis will only get worse. Now, what do you think? Would these reforms bring back the big insurance company? What do you think would be the perfect solution? Let me know down in the comment. Now, if you are a homeowner and you just found out that your insurance got dropped, don't panic, but take actions fast. First, call your insurance immediately. Check if they have any renewal options. If not, talk to an independent insurance broker. They are different from the in-house agents of the big companies who can only sell their company's product. The independent brokers have access to the wholesale market where all insurance companies exist. You may not get the best deal, but you will have access to a wider pool of insurers, which increases your likelihood of finding an insurance. Last but not least, check the FAIR plan. I know it's expensive, but it's still better than nothing when all hell breaks loose. Ask your agent what kind of home upgrades, such as fire-resistant upgrades, would that make insurance companies reconsider insuring you. And if you can afford those upgrades, do it. Now, If you are in the process of buying a home, get insurance quotes earlier before you close the escrow. Too many buyers are finding out too late that their dream homes are uninsurable. Overall, this crisis isn't just about wildfires. It is the result of outdated policy and regulation met with changes of time. California government has a choice to make, and we'll just have to see what they can do to bring insurance companies back because, after all, California still is the largest real estate market in the US, and it'll be a shame if it also becomes the first state that homeownership becomes impossible due to insurance. What do you guys think? Is California on the right track or is it just going to get worse? Drop a comment below and let's talk about it. If you like this type of video or find it valuable, hit the like and subscribe button so that you will not miss any future videos from me. Alright, thanks for tuning in. I'll see you on the next one.